Traders, what's happening? Jamie Setley here. It is 10 o'clock. Well, now it's 10 o'clock where I am. And it is 10/10, 2018. So, got a lot going on in the equity markets. FX is actually pretty quiet. We are starting to see, I want to bring in real quick before I dive into things. We're into a big level right now on dollar yen. Okay. So, remember the year open, excuse me, right here, 112.63. Big spot. Okay. You've got this low down here from 927, which is 112.56. This is still a possibility with the 1, 2, 3. Is this a 4 going higher in a 5? Frankly, I'm not going to get too hung up on that. I want to be more focused on the levels, right? So I'd be kind of looking for support down here, some sort of a washout and recovery. And really, I'd probably be looking for resistance back towards the median line. I mean, if you we could kind of count 5 down here, maybe a 1, 2, 3, 4, 5, something like that. So to me, it does suggest that the broader trend in dollar yen has changed. So kind of be more of a selling a rally type of guy there. But first, let's dive into the dollar. I didn't ask if anyone can hear me, so hopefully you can hear me. Hopefully I've been talking just to myself. Marco says yes. Pooja says AV Yoga. Peter, Jayha, great. Okay. Start with US dollar first. Chart from last night. What I like about technical analysis and the analysis in general that I do is kind of giving yourself a bias line, right? And in this case, our so-called bias line really is this parallel at this point that relates to the 2011-2014 trend line, okay? Lots of good action around it, going back really a year ago, a little over a year ago to August 2017. I wrote last night about how it's really been brutal. Mark says, I hear you fine. Is the recorder running? It is. It's like the old joke, is your refrigerator running? You better run and catch it. But when, had just the stop out, it seems like that's been really the name of the game with respect to the dollar, right? Has been just these, fits and starts. It's been very choppy, ugly price action. And patterns have been kind of hard to come by. So what I'm looking at here is simply bearish as long as we're under this line. I mean, that's really about it. The next level that you're looking at on the downside is probably around, this parallel, this next one, okay? And that's going to be that one, okay? You can see the action here on that one. So, that's going to be, 12,120 or so. So just kind of trading between these. Now, at some point, I do think the bigger move is to the downside. But again, with the levels, just concentrate on the levels, and hopefully we can kind of keep ourselves on the right side at certain times. You do have this. Excuse me. You do have this this fork right here, which it's not the best looking fork in the world. You don't have a whole lot of confirmation around it, but if we do come off of here, and start to trade between these levels, I mean, this is a very long-term chart. Okay, we're talking about we could be trading here for years. So it's just something to keep abreast of. Nothing to pay immediate attention to, in my opinion. All right, let's go to DXY, which we haven't really looked at in a while. But there is good reason to look at this one. So remember all the way back to the February low, okay? Channel. Remember the half extension and the full extension. Pretty much have been trading along these lines. And the recent top is right here. And again, just so ugly up here. You know, the gap up, right? Turning lower, retest to the highs, turning lower, and now here we are turning lower. So for me, I'd be looking down towards the next parallel here, which is like 94.80 over the next, you know, couple of days. And that would suggest, again, euro is probably going up towards 116 plus, right? So we bring the euro chart in. Hold on here. Okay. Not sure why everything is not populating here, but hold on. All right. Okay, so you see our little magenta dot over here, right? I wrote about this yesterday about how we have how we had divergence with RSI in euro. 1 second here. Hold on. Okay. Sorry. So wrote how we had divergence. Remember my rules for divergence. You've got to have RSI, obviously a higher RSI and a lower price, but I also require that RSI has got to be above 35 at the low and below 65 at a high. That saves you from essentially calling too many false turns, okay? In fact, actually thinking about this, I forgot to mention this with respect to the dollar. So we almost had RSI, we almost had a divergence on the weekly, on the US dollar, okay, the FXCM one. All right, so we almost had one on the dollar. You can see here, we've got, if I put in RSI, the RSI closed last week, we closed at 65.59. If we would have closed 0.59 lower in RSI, we would have gotten a divergence on the weekly. You can see that we've had divergence on the weekly chart. We haven't had it all the way since November 2015 and then January 2016, but those tend to indicate pretty good turns, all right? So we were really close. We had it intra week, but not on the close, and that's really all that matters. So I did think, I thought that was interesting that we kind of were so close to registering that. But as it is with euro, this kind of suggests to me that you do have a better standing low in place, and we already are, well off that low, 100 pips or so off that low. So remember, we had 114.10 as a level and didn't quite get it. I did mention that we had traded into weekly reversal support, so that's also a good sign. I bring up the weekly reversal support. Remember, all that is this. So you have your low week, which is right here, and the close of that week, is right there. It's 1438. The low here yesterday was 1432. Okay, so guess where weekly reversal resistance would be? Yes, it would be this bar here. Throw up a close on that, and that would be 116.04. I think that's probably where we're going. And if I throw in we can put in a short-term little fork here as well. Let's go to an hourly chart. Get rid of this for now. Looks like we've got something to work with here. So if you draw this one, some of you may have already drawn it. Okay. So you can see we've been trading median line, pullback. Low last night was 1479. 1479. Obviously, we had an entry at 1465, didn't get it. That's all right. I think we have something to work with here. So be looking like something like this, right? If you do turn up off of here, extend up into this level, 1559, then you'd be looking for support back here in the median line. You could look for support literally like kind of like now, because this was the old resistance for the last couple of days. So like as I'm speaking right here, 1522, you could probably look for some support more or less right here, and you've got a pretty good stop down at 1479. If I were doing this, on trading on a really short-term basis, but eventually we're looking up towards the upper channel light, which is, again, the 116 level. You do have the month open there. You've got the weekly reversal resistance there. If I go to a 4-hour chart, you've got, well, the 200 average on the 4-hour chart is a little higher, but 1630. But you get the idea, right? Looking toward that 116 area initially, and then kind of see what we've got. Again, pattern for me right in Euro is not especially clean here. I mean, you've got 3 waves up and you've got an impulse down. The question I was wondering, and a member had brought this up a while ago, may have been Mahai. I don't know if you're in here right now, but you had talked about maybe the possibility of this being a big flat, right? Because this is so overlapping that maybe this counts better as a B wave, right? Like an A, B, C, right? 3 waves up, B wave, and then impulse down, C wave. In that scenario, this would actually be 1, and this would be 2, right? Ty says you had a diagonal support resistance zone about 6 to 8 weeks ago. Are you still tracking it? Diagonal support resistance. So yes, I believe what you're referring to are probably these parallels, right? And yes, absolutely. These are simply the parallels that are based off of the February to April trend line. Okay, and that's why we had one 1410 marked down here, but that was never reached. As I wrote over the last couple of days, I said we'd be looking for, support down at 1410, but if we never got it and we turned up, we probably wouldn't be waiting for 1410 to turn bullish. And indeed, we hit this parallel. So again, we hit a higher parallel. So you just come off of the 9.4 low, and you had support there last week, and then yesterday that little stop run here never made to 1410. But 1432 turned up. So, look, you probably are looking toward closer to 1670, but 16 is certainly the first stop that you're looking at, right? Okay. Well, let's move on. Let's move on to cable. So British pound. This is kind of the thing we've been tracking. What I wrote last night, that you might have, a higher low in place, right? So what I simply mean by that is you are in the third, Didn't quite retrace 618, but pretty close. Ty says, can I show an RSI? Sure. So here's RSI on British pound. Okay, Ty. So Ty wants to see an RSI on euro. Sure. So here's the 4-hour RSI on euro, right? This sorry, this exact chart ties in last night's update as well. So don't forget about the updates that we have. I've got RSI and everything in there. Okay. Alrighty. So moving on to British pound daily chart. Talk about RSI actually. This is a good sign, bullish sign, turned up from near 40, meaning that we essentially are kind of in what I would call a bullish, a bullish sequence in RSI. The RSI profile is into a bullish manner, if you will. So in this case, 2 legs up, which is where we'd be looking, would be 135.55. Okay. That's fairly close to halfway, 50% retrace of the entire drop. So this 35, 20, 50 area is kind of in my mind, a target area. And the question now is, where's the angle? So we could draw this, but we might actually have something a little more bullish and something like this. So that's, basically what my mind is telling me, that to buy dips, okay, in British pound. The question is, though, where exactly can we do that with precision? So initially we had this. I'm going to get rid of this and clean this up. And now we have any volume levels over here. So we still have the volume level down there. Okay. Heads up on the NASDAQ down here, guys. We're getting into a level like literally right now. All right, so right here, okay, 75, 175. This is the March high, actually. It's also the 25 line of this channel. All right, so again, our question is, where is the ideal place to buy dips in British pound? It's still, in my opinion, actually, if you do pull back some, it's still on this 130.78 area. Obviously that might be a pipe dream. So if, we end up trading higher and we find support on the center line, then that's where you'd want to go, right? But generally speaking, my bias is to the upside. Talked about this a lot. Not a huge fan of trading cable over here, just with the whole Brexit thing, and it's such a headline newsy trade, and frankly, I just don't have any edge there at all. So, we've had some good trades with British pounds, but it's one of these where I don't like to chase, right? Like, it just seems like the market's so susceptible to snapbacks and spikes and everything. Get people leaning one direction, then it rips. If anything, it's worth fading it, right? Like back here, we had identified this as a level on 10.3. It was actually last Wednesday, 29.0518 as a level for support. Just never really got the entry after we turned up, and that's trading. So, in any case, generally speaking, I am looking higher in cable. Just need to get your price, need to get your setup. So, the best entry would be like if you got a Brexit headline that was bearish, and all of a sudden it sent it back to 30.80, and that would be our entry for support. Okay. Let's go over commodity currencies real quickly, and then we can move on to yen and kind of do some indices with that. Chart from earlier in the week, I believe Monday. I'm looking at essentially the 130, 50, 60 area, excuse me, as resistance. So nothing's changed there, right? Would still be looking at this area as resistance for, need to hold, basically. I mean, that's all there is to it. So 30, 50, 60, keep an eye on that for resistance. If that fails or does not do anything, then you're looking at 131.35, which is a square root level, which is also very close to the high from March of this year, okay? But two really clear zones to trade into. Australian dollar, no need to get fancy here. All we're looking at is the channel, right? We've got the pretty good looking channel. This is last night's chart. Did talk about the 70, 80s. I was looking at this, and it's possible, I guess, that this is actually a 1, 2, 3, and this is a 4. It does seem like a pretty small fourth wave, though. Not much clarity here for me on pattern, but just follow the channel. I mean, resistance median lines is now 71.40s. Frankly, would like to see the 70.80s hold for a bigger move to the upside, up to this level. Other than that, if you go down to new lows, pay attention to the lower channel lines. I'm not going to spend a lot of time here on Aussie at this point because I frankly don't have much to say about it. Kiwi, similar, just follow the channel, although there's an interesting longer term chart on Kiwi, or longer term angle on Kiwi, I should say. So this is a long-term fork. You can see right here, spent 3 weeks up on this back in 2015. I remember this period well because I was really short New Zealand dollars up there. Same line with support in November of last year, so just about a year ago. And now we're kind of trading around it. And I do have this thick bold line here because that's weekly reversal support, 64.54. Okay, we've come into that level now, which is quite important. So Kiwi, I've got an interesting spot down here. Frankly, I'd like to kind of see it hold up throughout the week. If you can put in a little reversal bar like this and hold up while the entire equity market is taking it on the chin, that actually would be, to me, kind of a relative strength type of thing. And I would, at that point, be more willing to buy it down here than, say, just do it midweek without any real setup, right? Which right here, I don't really think we have a real setup, right? Like at this point, you just have a pretty meager bounce. Okay, heads up, we've got dollar yen right here trading 112.64 right on the year open. We are unchanged on the year in dollar yen. How about that? which is where we're going. So we talked about this earlier, but here we are. Got to be on the lookout for a bounce here in dollar yen. Obviously stepping right in front of this, with what's going on in the equity markets might not be the easiest thing to do. But we do have the Qs at 175, which is an important spot. Hold on for a second because I do have to check something here. Okay. We're looking at dollar yen, right? We want to be looking at equities as well. So Nikkei. To me, the real retest on the Nikkei. So you've got this huge breakout. We're pretty close to coming back and retesting the breakout level, which would be about 23,044. And you can see right now we're currently trading 23,195. So that's 150 points lower in the Nikkei. That's not that far, obviously. I would kind of be, if we like to see a test of that, right? And, then I think you probably have an opportunity to buy dollar yen. It's important, I think, too, in an environment like this where, throw up like a 10-minute chart or something, right? An hourly chart is even better, but, if you have not much patience, then, 10-minute chart, look for a good reversal bar, right? See if you can trade back up into the 1280s, okay? I mean, we're right there. This is the level we were talking about. We said 112.63. We just traded 112.60. So I am looking for this level to hold right here. All right. I'm looking for this level to hold. And, we could trade back up into, the median line. I mean, you could trade back up to 1370, 1380. Let's say for argument's sake, let's see what happens. I love that. Look at that. A 618, if we just stopped just here, if this is a low, and I think it could be, then I think we're getting, a 618 is 1382. That puts you right back up into the median line. How beautiful would that be? So you know what to watch for there. Essentially, we're on a level right now. We want to see it hold in dollar yen. And Nikkei, maybe a little lower before it gets a better bounce. But now let's talk about these other, the U.S. indices. So here are the Qs. Was looking yesterday for more of an ABC up. I thought we had an A and then B here yesterday, remember? But just that was it. So median line, very minor bounce. Must say that if this is 1 down and 2 up, I mean, we've got some problems in this market, because that's a pretty shallow. Okay, so 2 legs down gets you 170.40, very close to the Jan high of 170.90. It would seem that this would be an area where, where the, kind of a magnet, right? I like to call it a magnet, where the market might want to go. We are on a level right now, so be respecting a bounce, and we have bounced a little bit here, right? I think an important chart to follow is the composite, NASDAQ composite, because you've got the 200-day average a little lower, and it's right on the trend line. This is huge, okay? So you got the high from January, 200-day average, and this trend line, which is just the line off of the February and April lows, and that's all just above 7,500 in the Nasdaq Composite. This channel is very clean. The Q's channel is pretty clean. The NAS 100, so to speak, or the CFD, which is like the futures, to me, it's clean because you've got the channel up here. But if I were following for resistance, this is probably the one I'd follow, right? I'd be looking at the median line here, right? So the median line, you know, trade around it back here in May, traded around it back here in June, and we just broke it after holding it just a couple of days ago. So, you know, if you're trading or looking to trade, you know, the NASDAQ on the short side, if you get a quick move higher here, I'd be looking at basically 7,300 as a level for resistance in the NASDAQ, okay? That, and again, this is NAS 100, so that's like your, again, your CFD, which is going to be like the futures chart. So, you know, you're kind of having to follow a couple different things here, but resistance here, and then for support, you need to look at the composite chart, and that's going to show you where the 200, as a 240, where the 200-day average and all that good stuff is down here, okay? Just wondering if, well, that makes sense. So you've got, get rid of this stupid thing. The 25 line on the NAS 100 chart is actually the 200-day as well. Pretty close to January high. Okay, what about other indices? S&P 500, again, here's SPY, so this is the ETF. I talked about, I think I put this chart up on public Twitter last Friday, and it was actually this one, wasn't it? Yeah, it was. Okay, so you see how that hit it. We came back Friday and yesterday, and bye-bye, good night. So the level here where I'd be looking or thinking bounce, probably today with the way things are going, is look at that gap from August 15th. So that's the what we call an uncovered close, right? And that level is 281.76, which is also right on the line from the April and May lows, okay? That's where I'd be looking for a bounce in this chart, okay? And you can see how, you know, the reason I wanted to look at the indices after looking at dollar yen is because they kind of line up, right? Like we're talking dollar yen's at this huge spot, 112.63. We got the Nikkei, the NASDAQ, and the S&P all look like they need to come in a little bit more, you know, before they would be willing to bounce from a well-defined level, right? So that's all I'm getting at there. And it kind of jives, I think, with what we're thinking on dollar yen as far as getting a bounce from nearby levels, right? Okay, what about some of the metals? And then, of course, crude oil, which is getting whacked today, I think. Yes, it is. It's not down over 2%. So okay. Crude, this is what we're looking at here. 4-hour chart. This is the daily chart, right? And then the 4-hour chart. Talked about this last week, coming down into this region and, you know, mid 71s or so. And then I'd be looking for support again in crude. So you've got two legs down at 71.42. How beautiful is that? That's perfect. That's exactly where we're talking about support anyway. So I love how this is jiving with that. And you can see so median line and then this parallel here, which I will put, as you can see just how clean that is, right? Resistance, resistance, support, 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 fake out, and then even recently kind of trading around a little bit. So this area here, give it, room, but like 71.40 to 71.90 is kind of where I'd be looking for some support in crude oil. You want to see that hold. Now, I've got that level marked as support again for crude, but there is something that we need to be aware of in terms of crude oil. So remember this, right? That was from 2008. Well, it's literally been repeating, right? So this is where we are now. This is Brent oil, so this is different. But for the most part, obviously, WTI and Brent are going to move together, okay? What I'm looking at here is, the potential for maybe weakness to extend a little bit, essentially through the end of this month. That would be in line with seasonal stuff too, because the crude typically is pretty bearish in October. But you can see how well the highs and lows line up here, the big ones. So like obviously you start with the low back in Jan 16. It matches perfectly with the low in June of 2017. It matches perfectly with the high back here in May. So eventually we're talking kind of this is all this sideways resolution probably into January and then another move higher. So just be aware of the potential for maybe a bit more weakness than expected in energy. But from a trading perspective, you got to pay attention on WTI to 71.40.90. Pull back there and get support. I'd look for a bounce. If you don't hold it, don't sit there and hope it comes back because the Brent analog suggests that it won't. Okay. Gold and silver. Somehow, gold's still sitting on this really long-term trend line, right? Remember, this is the 2008, 2015 line. Pretty crazy stuff. It's like it just doesn't want to move from there. Remember this? All that stuff. So we've been sitting on it now for 3 weeks, but since August, but we're still on it. So this is the futures chart, but really you need to get up through 12.12. The good thing about all this consolidation, I guess, is that the breakout level keeps getting lower and lower. Like where before it was 12.20 and now it's 12.12. And I guess you could even argue that if you broke the trend line, that would be somewhat of a breakout, although a horizontal breakout level in this respect, I think would be better. But yeah, that's what we're looking at. Silver is similar, of course. Silver actually never broke its equivalent level. Remember this one. This is the silver. This is the really long-term silver level that we need to see broken, right? And it just hasn't done it. In fact, we got up into it, very close to it. This is a weekly chart. So last week, go to a daily chart. That would have been on 10/2, which I guess was last Tuesday. We got up to it, and it never did it. Okay, it failed. So and it failed back here too on the 20th of August. So you do have the potential. You can see the potential for an inverse head and shoulders here. Look, that's the potential for it. So you get up through this, I think it'd be a pretty powerful breakout if it happened, because not only do you have the inverse head and shoulders and a very well-defined horizontal neckline, but you've also got this longer term parallel here. So these are parallels at levels that I just want to keep in mind, because these are, they're very powerful coiled opportunities, but they just haven't triggered yet, right? Gold and silver. So like we know we're not like in the dark. We know where we are. We know where we need to break to get this underway. But again, there's no reason to front run it. Okay. Let's take a look at copper. Copper, this is 200-week average that it held. Okay. Copper actually looks a lot better than gold and silver do. So this is a daily chart. Go to a weekly chart. I would draw a horizontal line on the weekly close here. And that's where I'd look for support in copper, which is 266. Probably be about 618 up as well. And it is pretty close. 618 is 267.40. So this area right here at 266 is, to me, where you want to be buying copper, or at least have an alert to turn bullish. Okay, so we've got that. Do not forget about TLT, right? And that 112 level. Remember 112? Had some charts in this last week. It's obviously super close. It's also a Schiff fork, right? If you draw this in, you have the median line there, which was also support back in February. So yeah, huge level, 112. If you get that 112, we traded down to 112.60 the last 2 weeks, early this week and then late last week. So we're really close. And my guess is that a bigger dollar decline you probably need to have bonds find support and get yields going lower, right? Which means bonds higher, before you can have an actual, concerted kind of dollar sell-off occur. That's just kind of my guess. But it is an interesting sign that the dollar is already starting to roll over a little bit, even with yields, still elevated. But yeah, that 112, huge for the markets in general. And then don't forget TNX, right? We've talked about this the last couple of weeks, but that 328 area, I don't have the long-term stuff on here, the trend lines, but 328, remember, was a level that we talked about as being, you're at the 200 month here. That's, remember, that's our line. So we're looking at maybe 328 as an area where you're going to get, a stronger decline in yields, and probably dollar weakness, and probably, obviously bond strength. So 328 probably would be pretty close to TLT at 112, right? So that's where our head's at with that. Okie dokie. What do we have insofar in terms of questions? Are getting a little bit of a bounce here in dollar yen, so that's a good sign, because this is exactly where we were looking for support. See if we have any high volume stuff. No. Kelly, what's up, man? He goes, yes. Let's take a look at Euro Yen. Kelly's asking about Euro Yen. Oh, by the way, I just noticed we have dollar yen right here. Not dollar yen. Euro dollar, excuse me, is testing the NFP level. That's the NFP level right there, 15.32. So heads up. So yeah, this was the Kelly talking about the Euro Yen marked levels from last night. Yeah, so I would sit tight for now. I'm still looking at. I'd love to get a test of this trend line here, right? That's the February line. July line was resistance, not precise, but good enough back here in late August. And if we can get a test of that on the top side, basically turn old resistance into support, then yeah, I would be looking for a move, a strong move higher. So kind of really on alert starting basically after a drop below, yesterday's low, which would be the 129.20s. Ty says what price? So basically 128.90 to like 129.20 is the ideal level for support, in my opinion, Ty. And what I mentioned yesterday was I'd be looking for a bounce back towards oh, well, hold on here. Oops, I already mentioned the 200 period average. I must have messed that up yesterday, 200 period, because I probably wasn't talking about the 200. In any case, 29.20, start looking for support down here. Your bounce level, you could be talking about all the way back towards 132, close to month open, but you've also got the underside of this trend line, right, from August and September. And I just want to see kind of where you'd get in terms of 3150 would be a 618. Yeah, I wouldn't worry about the upside at this point. Simply focus on the fact that after you drop to a new low, you want to be looking for support down here. Okay, I think you do get a hold, and I think that you get a pretty strong move back towards 131, 132 eventually. So that's where I'm at with Euro Yen. Anything else? Any other questions? Any other markets? You are quite welcome, Ty. No problem, my man. Getting a nice move here, response, I should say. It's not a move yet, but a response off of 1263 in dollar yen. We may have just seen a pretty good low while we were doing this webinar at 1260. Would not be surprised at all if that were the case. Okay, well, if there's not any questions, I'm going to give it a go and get into some equity trades here. I'll leave you with this NASDAQ chart. We're at a big spot here, folks. 175, right? March high, 25 line. Get yourself a bounce. Don't forget resistance. Look at the NAS 170, close to 7,300. That's an 80 handles. And in this market, that can happen really quick. All right. Okay, I'm going to wrap it up. I'll get this archived ASAP as always. And thank you all for your time. Have a great rest of your week. Be careful out there. Use stops, especially in these markets. FX is fairly subdued right now, but you know what? It's going to pick up. unlikely that you see the bond volatility and now equity volatility that we've seen, and then don't end up having FX volatility come along with it. All right, we'll talk to you guys later. Take care. Bye.